Hello everyone, this is Debra Richardson, and today I am putting the AP in Happy where accounts payable teams are empowered to protect the vendor master file from fraud. This podcast will give a voice to accounts payable team members by talking about the growing reality of cyber attacks in their world and which vendor setup and vendor management techniques they can apply to protect the vendor master file from fraud. Need training? Visit the Vendor Process Training Center to enroll in your choice of weekly live and on-demand training sessions. Plus, get access to vendor setup form templates and reference tools that will help you and your team avoid fraud, fines, and bad vendor data. So sign up for a free account to get access to free training sessions, vendor process FAQs, and a resource library with information you need to manage your vendor master file. Visit training.debrarrichardson.com today. The link will be in the show notes. Invoice automation is great for invoice processing and even has artificial intelligence tools that can help you spot attempted fraud. But it's really the vendor setup and maintenance process that will save you from making fraudulent electronic and check payments. Keep listening. Welcome to episode 335, Why the Vendor Process is Key to Preventing ACH, Wire, and Check Payment Fraud. Now, a disclaimer here is that I do realize that if you're making credit card payments, there can be fraud that won't be caught by the vendor setup and maintenance process, especially if you're not even setting up a vendor because you are making credit card payments. So I have had new scam alerts where I've reported that QuickBooks, for example, you know how your vendors can send you an invoice via email, and that invoice can have a link that you can directly pay via credit card. I actually prefer that from my clients, so I don't have to worry about giving out my sensitive banking information, since I know many of them do still collect it via risky email. However, there are risks with that too, because if a vendor pretending to be me sends an invoice from any type of solution nowadays, but QuickBooks was one of the ones that was in the new scam alert that I posted, they can send one pretending to be me, and then that gets paid. The difference, though, is that there are some fraud mitigation or fraud prevention that's inherent in the credit cards. So today, I am going to focus on the payments that, or the payment methods that are typical when you set up a vendor, and that is for electronic payments, ACH and wire, and then also check payment fraud. All right, so when I talk about the vendor process, I am talking about it in relation to the full-on P2P process. And I say full-on, but I'm going to do it at a really high level. And so I'm going to look at that P2P process with vendors, the vendor function, then the purchasing function, and then the invoice function, and then finally the payment function. And under each, I'm going to talk about why or why not, or what's done that helps to prevent payment fraud, or that doesn't help to prevent payment fraud. All right, so let's get started. So the first one is the first step of the P2P process, again, very high level, is the vendor setup and maintenance process, because you can't create a purchase order, you can't post an invoice, and you definitely can't make a ACH wire check payment without having a vendor set up. So again, first step is vendor. And this is where, the vendor function, you are creating that vendor record or maybe making a change to an existing vendor record. But when you're creating one, you're adding the remittance details providing during the vendor setup process. And that's either banking for ACH or wire payment, and then also could be a remittance address for a check payment. Now, again, this could also be for existing vendors changes, again, to ACH wire or remittance address information for the respective payment types. Now, what happens during this step should be all of those authentication techniques, internal controls, best practices, vendor validations to prevent fraud, fines, and bad vendor data. And it also includes how you collect the data. So, for example, you want your own banking form so you can ask authenticating questions. You want your own vendor setup form so that you can do the same thing, ask those authenticating questions. And that is especially true not just at vendor setup, but also at vendor change, because those authenticating questions, such as what is your existing banking information if they're asking for a banking change, or what is your existing remittance address if they're asking for a remittance change, or what is your existing email address that is on file if they're asking for a different email address for a contact. And by the way, vendor or fraudsters pretending to be vendors are doing that in advance of requesting a change to the remittance details, because they all know that you're going to contact them if there is a change in remittance, because that's what everybody does, right? That confirmation call, that confirmation email. So they're sending a request in advance to make a change to the contact information. And so you can ask them some authenticating data in order to, one, deter them, because maybe they'll just stop the process and go on to the next potential victim that's not asking those types of things. So it's really within this vendor setup and maintenance step that for changes or for ads or for changes that you're going to be adding in and performing those, again, authentication techniques, internal controls, best practices, vendor validations, to make sure that your vendor is real, that the information is not fraudulent, and that you're not putting your company at risk for compliance fines. And that includes, right, the legal name and tax ID against IRS records, the check against applicable watch lists such as OFAC. And also, it could be, right, checking to make sure that the remittance address is tied to the vendor. And so you can, right, put those things in place. And just in case you need some help with that, I do have, and I'll put it in the show notes, a 4-hour workshop. I know it's long, but for those of you that are in the vendor setup and maintenance space, it is really a foundational framework called Authentication Validation Management. It's a 3-step vendor setup and maintenance process to avoid fraud, fines, and bad vendor data. And in it, it includes 5 authentication techniques, 29 internal controls, 17 best practices, and 18 vendor validations. And if you've seen it or taken it in the past, every year I updated it, I update it, excuse me, and I always either add, right, internal controls, which I added to last year in 2024, but in 2025 I added 2 additional validations, and that's just because the fraudsters are always evolving, and so we need to do the same thing to stay ahead of them. And so if you want that, want to take a look at that, I'll put a link to it in the show notes. So again, all of these things are done to ensure the vendor record data is valid, accurate, and not fraudulent. And it's not just done at the vendor add or change process or when you get a request for those. It's also done on a periodic basis when you're cleaning your vendor master file to make sure that that information hasn't changed, that it's still valid, still accurate, that your vendor hasn't subsequently been added to a watch list. So it's really key to continue to maintain that information to make sure nothing has changed. Now, I will tell you, you might be thinking, well, that sounds like a lot of stuff to do. It is a lot of stuff to do, and it is required, again, to avoid fraud, which we know can be very expensive. And it's also, though, to prevent compliance fines, which also can be very expensive, especially when you're talking about what are those watch lists? Because OFAC, it's not just right one fine. You can have a civil penalty and a criminal penalty as well. So all those things really needs to be done. And so this process can take up to, I've had clients that would say, 10 days. I know of payment solution providers who, by the way, if you give them all your payments, you don't even have to worry about remittance details, which, right, is really the key to payment fraud is diverting those vendors' payments. And you can't do that unless you change your remittance details. And so they take ownership of all of that. You don't even need to keep them in your vendor master file, which also helps to prevent against internal fraud, like all of these things we're talking about. And so, with the vendor setup and maintenance process for payment solution providers, again, it can take anywhere from 10 to 15 days. And if you want to, right, implement or add to your policy that your turnaround time should be that amount, right, 10 to 15 days or up to 10 days, definitely don't do like I did before all this fraud started happening. When I was a practitioner, we had a turnaround time of 48 hours. I would actually never do that again. I would give my team time to perform all of the authentication techniques, internal controls, best practices, and vendor validations that were put into place to avoid fraud, fines, and bad vendor data. And by the way, making that confirmation call is not as easy as everyone seems to think it is outside of the vendor maintenance space, because inside of the vendor setup and maintenance space, we know how long it can take. We know how many calls we typically have to make. And so you have to give your team time for that. All right, so that's the vendor setup and maintenance process. And by the way, it should not matter who owns that function, whether it is a separate vendor setup and maintenance team, which I actually prefer, but you could also have it with like a master data maintenance team, which would also include like customer data. That's fine too. But it could also be, a couple of team members within accounts payable team, or it could be within the purchasing team. Now, typically don't like it within the purchasing team. Not that I don't like it, but what I usually see is that all these things that we do for such as validations and the regular maintenance is typically not done, or I don't see it being done in the purchasing space, because that's not their focus. Their focus is, strategic vendors, getting a great price, which is important, but whoever has this function needs to make sure that they're protecting the company from fraud fines and just overall bad vendor data. And so I don't see that that's being done as vigilant as when it's with the vendor separate team outside of purchasing. And speaking of purchasing, which is the second step of this high level P2P process, their process or their goal of having that PO created, again, you have to have the vendor set up first, which is done. And so their thing is, right, making sure that the addresses that they need for purchasing, right? The ordering addresses have been added, and that the payment terms are correct. And that should all have been taken care of on the vendor setup and maintenance side. If not, then you've got to go back to the vendor team and get it updated on the vendor record. But once that's done, right, the PO is created, and that's all that is necessary. And so I don't see where, and I could be wrong. If I am, definitely, reach out to me and let me know. But I don't see where there could be a risk of diverting vendor, ACH payments, wire payments, or check payments from within the purchasing process. Now, yes, there could be some collusion with internal fraudsters, right, to send invoices or create POs for products that were received or services that were not performed, but that does require collusion with like an internal team member or team members in order to perpetrate that fraud. And it still does not have any bearing on the remittance information to divert payments. So that's purchasing. And then the next one is invoice or invoice processing. And again, you need to have that vendor record set up so that when they get the invoice in, they can choose the right vendor, they can choose the right address ID, for example, that's tied to the payment information. So all of that should be done. And you might be thinking, yeah, but what if they made a change to the remittance information on the invoice? Well, first of all, no remittance information should be changed based on an invoice, because if you remember in the vendor process, there should be a specific process for vendor changes that is controlled by the vendor setup and maintenance space, because they're going to have require authentication, including right authentication of the requester, authentication of the data. They're going to have their own forms that need to be sent in, and they're going to have just a process that's going to eliminate or try to avoid or prevent that potential fraud. Again, those authentication techniques, internal controls, best practices, vendor validations, that is going to prevent that fraud. And if you just make a change based on an invoice, that's really making it easy for a fraudster to get the remittance information changed just because it's on an invoice. The other thing too is, how are you even going to notice that the information has changed? And if you are doing it manually, that now I do know that there's invoice automation out there, and that's great. It helps you to process the invoices much quicker instead of manually processing the invoices. But unless it has, and some of them do, I will say that some of them do have artificial intelligence built in, where they can look at things like the email address that the invoice came through and compare it to the email addresses that is on file or that other invoices have come through. And if it's different, it can flag that for potential fraud. I also seen them where they will compare the addresses or the banking information that's on invoices against the remittance information that is on the vendor record, and then tell you if that's different. So that's all good and fine, but it still doesn't mean that you need to make that change based on that invoice when you do see it. And so because again, you need to follow your the vendor setup and maintenance process that again is in place to avoid fraud, fines, and bad vendor data. And if you don't have automation that's going to pull it out, again, how are you going to find it? And so I had one person reach out to me that was responsible for invoice processing, and the vendor's information, remittance information did change, and they ended up sending the payment to the vendor's old remittance data. And then they got in trouble because they said the change was on the invoice and they didn't notice it was on the invoice. That's hard to do. And if you think about it, especially if you're doing it manually, you got a lot of stuff to look for. How do you have time to check it against the vendor record? And plus, many folks that deal with invoices have a lot of invoices that they need to process. And many of them, like they did in the places where I worked, right, had quotas. And so expecting them to find fraud, to enter it in correctly, to find, right, other things that need to be done during the invoice process. It's kind of hard to make sure that they also find changes in any data on the remittance data on the invoices. So in that case, again, invoice processing, even though a fraudulent email or fraudulent invoice may be sent in because you're not using that invoice to update remittance details, that's not where the key to preventing fraud is. The last step of this high level P2P process is payments. And so you might think, well, why wouldn't payments be included in here? Well, you're not making any changes here during the payment process. Remittance information, when those pay cycles are run, whether it is for ACH, wire, or check, that information is pulled from the vendor record. And so when a check payment cycle is run, is pulling the remittance address from the vendor record. When an ACH or wire file is generated to be sent to the bank, that is pulling the banking details from the vendor record. And again, unless you change the vendor remittance information in all the way back in the vendor setup and maintenance process, it's not going to result in fraud. If you've got fraudulent information in there already, yes, it's going to result in fraud, but it happened back in the vendor setup and maintenance process. Now, one caveat to that is if you have a separate treasury function. Now, when I was a practitioner in my last role, we did have a separate treasury department or function, and that uh, area or treasury used to handle all of our wires. And so what ended up happening is we really had duplicate vendor information stored when we had to pay vendors by wire, because we would set the vendor up or update the vendor, right, with the banking information for that wire on the vendor file. We then had a process internally or within the system, whatever you want to call it, that would send that information to Treasury, that would give them the vendor's banking information that was required for the wire. They would then take that information and then put it into whatever Treasury software that they used so that they could make the payment. So they were still, right, getting the information from the vendor setup and maintenance process. It wasn't a separate email that was going to Treasury requesting that they update the vendor banking information. That still ran through the vendor team, and there was an automatic process that would then send the change to or the ad for that matter for a new vendor to the Treasury Department. So they knew that they could ignore, email requests and any other type of requests other than this automated process that would send them the vendor banking for payment. So if you do have a separate Treasury function, make sure that they're getting their information from the vendor setup and maintenance team, again, that has put into place authentication techniques, internal controls, best practices, and vendor validations to avoid fraud, fines, and bad vendor data. All right. So that is it. That is why I think the vendor process is key to preventing ACH, wire, and check payment fraud in the high level P2P process. Now, don't forget, I will have in the show notes a link to the AVM, three-step vendor setup and maintenance process workshop. And that again is that 4-hour training that will go over all 5 authentication techniques, 29 internal controls, 17 best practices, and 18 vendor validations. And I'm also going to put a link to a training that I call the Bank of AP that has 4 or 5 additional controls, internal controls that you can surround that confirmation call with to better prevent payment fraud. So thanks, everyone. I hope you enjoyed the 335th episode of the Putting the AP in Happy podcast, where accounts payable teams are empowered to protect the vendor master file from fraud. Don't forget to check the show notes for the links mentioned in the podcast. And if you enjoyed this episode, consider subscribing and writing a review of my podcast on the platform that you use to listen. Stay happy.